Are you new to real estate, struggling in real estate, looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. Whether you're starting out or already seasoned, this podcast is designed to give you practical tools that you can implement right away. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation investor and realtor with 19 years in the business. When I created this podcast, my goal was simple. It's to help beginners and struggling investors close their first deal or their next deal, all using low to no cost tools to analyze properties and craft strong offers. This is the weekly deal analysis. Let's get into the show.
I need a favor. If you're getting value from this, would you hit that like button for me? It really helps the channel out, and I appreciate you for it. Now, back to the video.
This week, we are sticking with Illinois and going just outside Chicago in the suburbs of Minooka, 225 Sibley Drive, Minooka, Illinois, 60447. This is a three-bedroom, three-bath, just under 1,700 square feet. And from the pictures we can see right here, looks pretty good. Let's dive into the rest of the pictures. That was clearly spring. At the time of this recording, it is November. So we got some pretty floors, original cabinets probably. Nice appliances, nice floors, doors. I like their design too. It's pretty cute. May, meh. That is a big closet. Big bathroom, another bathroom. It almost looks like a little catwalk up here. Laundry, unfinished basement, lots of good storage. Nice backyard. A lot of open space. I love a good floor plan tour. Just helps you kind of map out a whole lot better of how you can really use the space. It's one thing that I do for my sellers as an agent. All right, there's our pictures. Let's see what else we got here. All right, built in 2002. Zillow's saying they're pretty close on what they're asking. No HOA. Only 3 days on the market. Now, I searched for the oldest things I can find, and 3 days on the market was the oldest thing I could find. So there's something going on just outside Chicago. If you know what it is, drop a comment below. So we got new flooring in 19, new lighting, quartz countertops, stainless appliances in 21, updated half bath in 19, newer roof in 17. And that's about all we can pick up there. What else do we got here? All right, so they're ranging from 346 to 382, 2,800 a month for rent potential. And yeah, they've been on the market a few days now. They bought this in 13 for 195. Good for them. Whoa! 62, 68 a year in property tax. That is crazy. I mean, that's 2.5, almost 3 months of rent just to pay the property tax. I don't think this deal's going to work on a cash or a creative, but we never know until we dive deep enough. All right, anything around here? It has sold recently. See if we can zoom out a little bit, find something maybe. What's this one? There's a 347 closed. Did I go too far? I think I did. Yeah, I went too far. No, I didn't go far enough. Goodness. 23, not even close. Nope, that won't work. What about this guy? 24, getting closer. 24 as well. All right, I'm not finding anything I like in there, so let's keep scrolling. Off market, off market, off market. Got anything that has sold recently? Um, these are all smaller. 350. Trying to find something at least close to the same square foot. What do we got here? This is a duplex structure. I think our subject property is as well. Getting closer here. At least we're finding some closed over here. Let's see when this one sold. 19. That's not telling us much. What about this guy? Here we go. This closed in 815 for 365. I think the market softened a little bit since then. So, all right, let's take that, roll it back over. There we go. Yeah, same type of structure here. So factoring all of that in, I think we're going to say our ARV or after repair value. I don't know. I think I'm going to go with 350. Write that down. 350 is our ARV or after repair value. All that means is what it would come in at an appraisal price at. So I really don't think there's a lot to upgrade in here. So we're just going to use 0 as our renovation budget on the cash and the creative side. Now we're going to jump over to the invest nest and analyze this thing as a cash deal.
Are you getting value out of this? If you would, hit that like button for me. Now, let's get back to the video.
So I've got the property pulled up here on the Invest Nest. I love this site. I use it daily, basically, analyzing deals that I'm going to make offers on and also helping some of my clients. But if you want to try it out, I highly recommend it. I'll have a link below. If you use that link, you get 50% off your first month and your first week for free. And one of the coolest things, skip tracing is included in the price. They don't charge extra for that stuff. So if you don't know what skip tracing is, if you push that button, it will analyze all of the internet and give me their contact information. Finance details. It looks like they refinanced in 22. And also in 21. What are refinances? What else can we find out here? In Will County, this will come into play here in a minute. All right. Let's crunch some numbers, shall we? We got 225 Sibley. All right, our purchase price, we said our ARV or after repair value is going to be 350, and on a cash price, I'm offering 70% of what I think the end value is. So I can't do that math in my head. Let me pull up my calculator real quick. 350 times 70%, 245. So our purchase price for cash is going to be $245,000. Our closing costs, we're going to offer to pay both sides. I don't know what it is locally there, but for a baseline, I use 4%, 2 points each side. And our lender charges are going to be 2 points, and that's either for our DSCR lender or debt service coverage ratio number. If you want information on that, just drop a comment below, and I'm happy to provide that for you. But it's basically an investor loan. So that's going to be 2 points. We're saying our improvement costs or our renovations, we're not going to have to do anything. Down payment, we're going to go with 25%, but I do want to try to push the loan term out to 30 years. Last I was quoted was a few weeks ago, and that rate was 6.75. 75. There we go. All right. And our rental income, the InvestNest is not telling us anything. Zillow said we were at 18 and change, I believe it was. No, 2804. Okay. And now we're going to jump over to check the HUD or Section 8 website.
I need a favor. Can you hit that like button for me? I would really appreciate it, and it helps the channel out a lot. Now, let's get back to the video.
They're pulled up here on HUD, which is the fair market rents or Section 8. And basically, this is what they're saying that they will pay a maximum of for the area. So we got a studio, 1 bedroom, 2 bedroom, 3 bedroom. So for our 3 bedroom, they're saying 1950, and which is really low compared to this potential 2800 that Zillow is telling us. Where, here it is. So 2800. That is a large gap. So I think we're gonna ignore both of them, but kind of use them as a kind of our outer perimeters, and we're gonna go with 2,500. Now, remember, always check with a local agent, property manager on the specifics. I don't know this market, so make sure you're checking with a local to dial in your numbers. 2,500 for rent. Our property taxes are through the roof, over $7,000. That's just insane. On a house like this, we'll say 1,500 or $125 a month. Um, Management fee is going to be 10%. Our tenant is going to be paying all of our utilities, so we are not factoring that in. And our reserve fund, I like to call it my war chest. So that's repairs and maintenance, vacancy and loss, and capital expenditures. Capital expenditures are things like your roof, your HVAC, the big ticket stuff. Vacancy, you always got to plan for when you don't have a tenant in there. And repairs and maintenance, it's never a matter of if, it's always a matter of when something is going to go wrong. So 15% coming off the top every single time. Our appreciation rate, we'll stick with a safe, conservative 2%. And I like to increase rents about 2.5%. So what else can we get? Oh, and we're real estate investors. We don't pay full commission. All right, let's see what these numbers spit out.
Hey, real quick, can you hit that like button for me? I appreciate you. Thanks.
Oh, goodness. Negative $32.17. So we can spend almost $75,000 to lose 32 a month. Not a good cash deal. Yeah, cash on cash is negative. DSCR rate doesn't hit. Most of them look for a 1.2. Cap rate is more of a multifamily thing, but most people generally look for about an 8 cap. The crazy part is your return on investment is 8.5%. And even crazier, if you follow the 1% rule, it says it works. It doesn't work. And again, that's really just because of the property tax. Yeah, almost $600 a month in property tax. Even if we cut that in half, which would still be high in my opinion, yeah, that's just bad. We would have to hold this thing, increase rents 2.5% year over year, and hold this thing for 3 years before we actually got a positive return. All right, let's do my favorite part, the creative side. This is my creative calculator. You can get it off of my website, christhompsonteam.com. The link will be below as well. It's a free download. I got a bunch of free tools on there. Use them, love them, and I hope they work for you. We said our ARV is going to be 350. And I think our purchase price should be, on creative, we're generally getting really close to that because we're asking that seller to be our bank. So I say, let's try 325. And our interest rate, let's see what we can do at 4%. So now to figure out our PITI, or principal, interest, taxes, and insurance, I'm going to jump over to Bankrate. This is Bankrate, one of the free tools I use. Super simple site. I love it. It gives me the breakdown on everything, and I can even run an amortization schedule if I really wanted to. So we said our purchase price is going to be 325. I only want to try to put down 5%, 30-year term, and we said we're going to offer them 4%. And 60447 is our zip. Our property taxes, where's that at? Over here, are 590. Goodness. 590. Insurance, 125. All right, not horrible, but I still think we're going to be negative. 2189. And that's for principal, interest, taxes, and insurance. So 2189, we're going to go plug in over here. 2189. And we were going with 2500. Wow. Yeah, that's still negative by a whole lot more. This is actually a worse creative deal. All right, let's get a little more creative here. How do we try 2%? 2%, everything else stays the same. All right, 1856. 1856. All right, at least we're positive. So that just gives you a perfect example of how much an interest rate can change that payment. We already know the property taxes are way too high. But from dropping it from, hang on here, from 4% down to 2%, it actually at least made the deal somewhat work. All right, our cash to the seller was the 16,250. Agent commissions, this thing's brand new on the market, so we really can't do much about that. Typical commission would be 3 points, so that would be 325 times 9750. And that's only for the seller side. Complete forgetting that lawsuit that happened and now all the commissions have changed. From my experience, nothing's really changed in the business. The sellers are still paying both sides of the commission as they always have, but that is a conversation for another day. When I write an offer like this, I am making sure that I waive any potential buyer agent commission in there because I'm coming in unrepresented. There's no assignment fee because we're not working with a wholesaler. Closing cost is that 4%. We said our renovations were going to be 0, and 2 months of that holding cost is really just 2 months of this mortgage payment. Nothing in arrears, and a good transaction coordinator is $1,500, give or take. So for $44,000, we can make $20 a month. And if you're local, you can save yourself this 250 and manage it yourself. And now you actually got a pretty good deal. Still, for me, that takes way too long to recoup my money. But yeah, for me, Illinois has been striking out. So if you are an investor there and you do make money there, drop a comment below and I'd love to have you on the show so you can explain how to make deals work in Illinois.
Hey, real quick, can you hit that like button for me? I appreciate you. Thanks.
And there you have it. Not a good cash deal, not a good creative deal. And we got to get pretty darn creative and almost say, 0 interest on this thing just to make it a positive return. I wouldn't buy it. Would you buy it? Would love to hear your comments below. That is going to do it for us this episode of the weekly deal analysis here in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. We'll see you next week.